Welcome, welcome, welcome. All right. Welcome to the pre-market. I know there's nobody here, but that won't stop me from going through my daily stuff. We're going to get started today going over some news stuff. So I think what I'm going to do here we'll check this out. Virgin Galactic. Okay. Lord and Taylor filing for bankruptcy. Who didn't see that coming? I'm sure. It's not even part of the top news. What I am curious about is the I am curious about the Microsoft news. So we'll see what's going on with TikTok there. I know I have a ton of stuff in my portfolio. Some of it is really small amount of shares, like I don't know, look at this. Duke Energy, literally $2. I figured if I'm gonna watch it, it's worth throwing a couple of bucks at. I don't know if that's a good or a bad idea, but it does get the dividend reinvestment churning, even if it's just a couple of pennies. I do take larger positions. Like one of my larger positions right now is Bank of America. selling puts to enter, and selling calls after I have the shares assigned, if I do get assigned. Um, Bank of America and AT&T right now are my big holdings. I have been selling covered calls on AT&T and Bank of America. I have this credit spread here, a couple of them, which is fine. But yeah, so my whole strategy right now, at least, is the wheel, which is, as I was saying, selling puts, cash covered puts, cash secured puts, whatever you'd like to call them, to enter into positions, and then, ideally don't get assigned, just keep the cash, the premiums coming in. But if you do get assigned, then you can sell covered calls, at least at that, you know, at that same price you got them for, or some higher if you can, until those get assigned. Collect premiums along the way there. So that's the main engine of the portfolio here. That kind of allows me to get more cash and acquire more shares. Because what I want to build, this portfolio is just starting out, right? So what I want to do is eventually, the whole portfolio is going to be designed around share acquisition. So the whole idea is to get the dividend reinvestment going. You can see, actually, I had AT&T pay out a dividend, I think this morning. Yeah. So, and all of my stocks that pay dividends will have a drip on them. But the entire point is to eventually spin this up into something that creates plenty of passive income for me on the side, without having to sell options, buy options, anything like that. But in order to get to that point, you need to acquire the shares. And if you don't have a lot of capital, one way that you can do that is collecting premium, and then applying that premium to share acquisition, rinse and repeat. So that's kind of the whole idea behind this entire portfolio. I had mentioned all these small holdings earlier, one or less shares. That doesn't mean that that's all I'm going to put into them, but it does mean that, like, they're less of a priority than, say, like AT&T I bought because it was undervalued, for sure. Anything really, in my view, AT&T was, anything under that 30-ish, $31 mark is pretty undervalued, because the dividend yield starts ramping up. I don't think AT&T is going anywhere. I think they've made some bad moves, bad acquisitions, but they have a lot of IP. So I thought that was a good play. Right now, I think banks are completely undervalued. Well, a lot of them were on that run up after March into April and May. Throughout the summer, they were really undervalued. So I went ahead and picked up Bank of America, which may or may not be a good play. I mean, Warren Buffett started buying Bank of America after I did, so hopefully I'm ahead of the curve on that. We shall see. So anyway, I guess I kind of got off track here. What I wanted to do was figure out what's going on with the whole TikTok Microsoft deal. I don't think I just don't see TikTok being bought by Microsoft. I don't. I don't think that it's. I don't think that it's. I don't think China will let it happen. I also don't think Microsoft actually wants to deal with that. As far as like politically, um, and I don't think that they expected a ban on TikTok during these talks. But again, I haven't really um, read a ton into it, as much as I probably should. But I don't have a large Microsoft holding right now. Um, that would be different if I did. But yeah, so let's take a look here. Oh, I guess market opened. Okay, it's fine. Hmm. One thing I don't understand is this whole um, oil company. I don't get the whole yield chasing with oil companies, right? Like I understand um, yield chasing with certain companies. Like I was just kind of talking about AT&T, kind of yield chasing there. But um, I mean, the hottest stocks right now are. I mean, one of the hottest stocks right now is Tesla, an electric car company. Um, so I don't see the logic here in like, okay, yes, we'll, you know, oil's kind of going by the wayside, I guess is what I'm saying, and that's never been clear. Um, I just maybe I need to deep dive into these oil company assets, um, but the combination of oil going by the wayside as far as transportation, I understand it'll still be used for like plastics, and, you know, industrial use. There's some, huge, machinery that I mean you're never gonna. I mean maybe not never, but it's not going to run on electric. You'll have to use diesel, stuff like that. But that combined with, like it says here, the low gas prices over the next 3 decades, BP's forecast, it's uh, it's just yield chasing, and I don't think I don't think look, launch a new green strategy, which is very funny. I mean, like, it, this gets to another thing that kind of I makes me question the like market efficiency theory. Is, I mean, well, if they're shifting to a green strategy now, right? Well, it's 2020. If they really cared about their business and wanted it to, and weren't, you know, and really cared about the long-term profitability of the business, wouldn't you think that they might, I don't know, um, have shifted to clean energy 50 years ago, 40 years ago, 30 years ago, in the 90s? I, I mean, it's not like they didn't know what was going to happen. I mean, it was clear to everybody in the industry that it was going to eventually shift to renewable energy. It just makes more economic sense, or green strategies, or however they want to frame it, biofuels or whatever. Um, but it's just, I don't know. They didn't care about their long-term growth or their long-term profitability, and yield chasing a company that clearly didn't care about their long-term profitability really is not something that I would like to get into personally. Um, I don't know. Maybe again, I haven't been diving into their assets and stuff, but maybe there's more value there than I think. But poor management, and poor management from the entire industry, rather than just a single company. So, uh, let's see. I guess I could pull up Thinkorswim too. A little more technical. Good today, up 24 bucks. I'll take it. This is what it's all about, though. Like, getting 0.5% a day, 1% a day, would be awesome. It's asking for a lot, but really, I mean, I'd take 2% a month. You know, um, that's just kind of where I'm at right now with kind of building this portfolio and you know trying not to like just YOLO into calls and puts and kind of playing it safer and taking the gains as they come. Little wins, little wins is what I'm all about. Little wins. Hmm. Hmm. I will have a better streaming setup at some point. Right now, my office is under construction, so um, yeah. I'm gonna get some music, I think, on the next stream, just so that it's not dead silence while I'm reading through stuff and we're watching. I guess we could see price action. Let's see price action on SPY. Hmm. Indexes are dropping. Pretty volatile this morning. It's okay. It's all right. I sell time. That's not so bad. How do we like that? And you can't see my holdings. That's okay. I'm interested to see what happens to Take-Two Interactive when GTA kind of starts to become. I mean, it's lasted a long, long time, but man, if they don't get the next game out here shortly, that game is gonna age out. It just feels like Take-Two's been just relying on 2K and Grand Theft Auto for their entire business. Kind of feels that way. And that, all the eggs in one basket is a vibe, and I don't think it's a good strategy. like dark mode on this website? Because that would be fantastic. Oh, wow. Google Pay bank accounts. Hmm. And this is after I just read yesterday about, what was it, Venmo? Yeah, I think it was Venmo setting up, they want all your banking to be run through them. Direct deposit, everything. Robinhood has direct deposit now. So, I mean, it's going to be a race to the bottom. We might even see companies pay me to direct deposit my paycheck into their account, which would be awesome. But man, there's just so much out there now. I mean, traditional banks, from traditional banks to brokerages to, we've already seen, fighting about high yield savings accounts and race to the bottom with fractional shares and race to the bottom with free trading and all this stuff. So the finance sector is they've had a lot of races to the bottom recently, which generally end up better for the consumer, but we'll see how that plays out with banking. Google having their hands in this, I mean, I don't know if that helps their antitrust deal, but I mean, they're in so many industries already. It can't hurt that much. Yeah, privacy, man, privacy. Now they have your location every day, all the time. Fitness down to your heart rate, and oh, by the way, we know every transaction, how much you owe on your credit cards. Yeah. Some people are uncomfortable with it. I think it was inevitable, but yeah. So I do wonder. I said so. Citigroup. So what's the action on Citigroup right now? Is this bullish on Citigroup? Not really. See, this is what I was saying, right? So if you look at every bank is like this, right? So you look at this is where we were, well, right up until the end of February and March. Everybody remembers this, right? If you were participating in the market at all, you remember the big drop at the end of February, beginning of March, and into March, really, throughout March. A lot of stuff recovered, right? So S&P 500, it's almost back to where it was, right? banks didn't participate in that at all. I mean, I just pulled up Citigroup, but Bank of America, the chart looks almost the same. And I know Robinhood doesn't have the best charts. So you can look at, on Thinkorswim or whatever platform you want. But the trend line is still the same, right? So they fell and failed to rally with the rest of the market. At this point, I saw this happen, and look, I'm just a regular guy. I don't do any technical analysis, mostly just quantitative analysis on companies that I like and use and have heard good things about. Usually, I haven't heard great things about Bank of America, but looking at their balance sheets and asset structure, I think it's a good investment. But don't take investment advice from me, though. Anyway, I saw that they didn't participate in the rally. No banks did. So I decided to take a position in a bank that I thought might make it through this pretty well and was in a defensive enough position. Bank of America seems to be, and had a good share price too, right? Like, this is a small account. Like, I didn't want to put all $5,000 into 100 Citigroup shares, just keep it. And I didn't want to use margin, all that stuff. So anyway, that's kind of like where I'm at with all these bank stocks. Is they didn't really, I mean, they tried here, but they didn't really participate in the rally like other companies did. Like, this kind of a fairly neutral trend since March. A lot of that is like uneasiness with, banks going to remain liquid. The fact is, after 2008, regulations hit, and maybe some areas need more regulation, some areas maybe less in the banking industry, but they're going to remain liquid, especially with the Fed printing so much money and doing overnight repos and everything that's been going on. They're going to remain liquid. And things have changed since 2008 as far as the structure of banks. So that's my bet, right? I can't tell the future, but my bet is they'll remain liquid. They'll be fine. Banks, one or two banks may, end up in a really terrible position. Wells Fargo is in a horrible position. I think out of all the banks, cutting their dividend. They've always been terrible to their customers. It's tough to get loans from them. They have high credit requirements for a lot of that stuff. And here's the thing about banks, right? So, and this is my philosophy on banks, is the whole idea is you need to treat your lowest customers, right? The ones that are living paycheck to paycheck, you need to treat them the same as you would somebody coming to you with $25,000 or $100,000 to invest. The reason is because, I mean, it should be obvious to a lot of people. In an ideal world, that person who's living paycheck to paycheck, who, is 20, right? By the time they're 50, they're going to need a place to put $100,000 or their nest egg, $500,000, whatever it is. And if you're a bank that that didn't cut them any slack and treated them like garbage while they were living paycheck to paycheck, and you charged them all these overdraft fees, you charged them all this stuff, well, guess what they're not going to do? They're going to hold a grudge. I've seen this happen. They remember that 25 years later, and they say, yeah, I'm going to take my investment and I'm going to go over here to JP Morgan or Citigroup or my local bank or Robinhood. And because they remember, oh yeah, they kept charging me overdraft fees, and like that really sucked, you know. While I was living like paycheck to paycheck, I remember one time I couldn't buy groceries because they overcharged me. All this kind of stuff is not uncommon. So when somebody finally does build up a nest egg and gets a career position and all this stuff, they're not coming back to you because you treated them like garbage when they were down. So, and that's been a running theme with Wells Fargo my entire life, for sure. It's been a running theme with a couple of banks. I know Bank of America has had some of those instances, overcharging on the overdraft fees, doubling the overdraft fees or whatever. I do think that their management has shifted on that. The executive team that they have in place seems to understand that where they make their money is not overdraft fees. It's assets under management. It's, I guess not right now, but mortgages are super low right now. So they're looking, to trading desks and all this to figure that out. But when they start looking into overdraft fees, well, now you're just pushing customers out. You're keeping your big customers, which is good because they're not going to overdraft. But you're pushing out the kids who are your next customers, like the 18 to 25-year-olds, the college kids, whatever. If they don't want or like what they have to see at that age, they're not going to come back to you when they have a career job. That's just not going to happen. So that's kind of my whole philosophy. You got to get them, while they're young, And if you fail doing that, they're never going to come back. It's like that with just about every industry that interacts with younger folks. Like put it like, if I buy a bike, right, and the bike breaks first day, but it was their $500 version. I didn't buy their best version. You think when I have $1,500 to buy their like top of the line bike, am I going to go buy that? No, because their first product, their lower end product, was terrible. So I'm going to assume that it's all low quality from there on up, and that's just I may be wrong, but that's what I'm going to assume if I have a bad experience as a low end customer, that the entire thing is a bad experience. So that's just kind of my business philosophy with banks specifically, but I think it applies to a lot of stuff. Activision's announcing earnings today. Man, this earnings week has been bananas. So many, and honestly kind of bullish, really. Lots of really low expectations being beat. I don't know if I'd call that bullish. I don't know. I haven't seen anything in the news that really affects my positions. Bank of America, nothing is going to affect. And look, that's fine. That's what I look for, right? I don't want to be worried about every news story affecting my position. I don't want that at all. A couple ways to accomplish that, right? Diversified portfolio. If you're just like all in the S&P 500, what do you care if this company or that company is getting bought out or this company went bankrupt? Okay, that's whatever. I'm in an index. So diversity. The other thing is you can just buy boring companies, right? Banks are boring, right? So AT&T is another thing. Intellectual property. They got it's a conglomerate almost, right? They got the cell phone thing going on, but the fact is that it's a boring big company. Like that's kind of what it is, and so I kind of gravitate towards those. But that's just my style. My style. I'm kind of curious what people think about Nikola. Yeah, ad blocks. Yep. Um, coming up a little bit. It's all right. Yeah, it looks like the index is recovered after this morning's volatility. SPY's back green, baby. I do need some music, I think. That's the one thing though is, am I gonna get, if I leave a stream up, right? Do I get a copyright strike? I don't know. Something I'll have to look into. Hmm. I do wonder. to look up passwords for that. So tomorrow, I think I'm gonna do. I'm gonna have the Robinhood Portfolio up, but I'm gonna try and get some more Thinkorswim up and get some more like technical data up. It's got a better news feed, I think. You can probably tell I'm trying to figure this out as I'm going. I do have kind of like a list of stuff that I want to do every day. And really the only difference is like talking through it rather than doing it by myself, which is fine. I mean, yeah, I think it'll be fun, and I think when you talk through something, whether it's to yourself or with other people, I mean, I guess other people help, but you start to realize different stuff as you're saying things, and people might suggest things to you never even thought of. You might even suggest to yourself something you never thought of. So I like talking it through anyway. We're gonna do it live here every day. I think, yeah, every day that it's possible to open the market. Yeah, we're gonna do it live. I'm gonna get some new overlays and things like that. And like I said, I have an office under construction. It's gonna get the quality is gonna ramp up, hopefully. So, but yeah, I think it's a good thing to talk through things. A bit of a run here. Let's cool. Yeah. Yeah. So AT&T, I think I bought about here-ish, somewhere in here, beginning of June. I saw this happen. I thought, I didn't see an uptrend yet, but I wanted to start selling calls. Jesus, 7% yield. You see that? I sure hope it can keep up with that. AT&T specifically, people people tell me all the time, "Oh my God, they have so much debt. They have so much debt," and they do. But the thing about it is they have so much revenue. Like, that's just kind of the thing, right? Like, oh yeah, you have so much debt, but if you can pay it off, who cares? You know? I mean, look at this, right? So, yeah, just these revenues, right? Total revenues have been coming up since 2015, really, right? Solid profit numbers, right? Um, Ah, duh. Yeah. Yeah, okay, here's liabilities. So, yeah, I mean, that does not look good. It does not look good. But their revenue, here, total liabilities, that's what I'm looking for. So, but their revenue can keep up, right, with all their liabilities, right? So, both long and short term. And they have enough revenue that they can continue to pay out their dividend, which is substantial, like we just said. You know, it's like freaking 6%, right? 7%, 7%. So all the right things are there as long as you think that Warner was their last bad acquisition, which, God, I hope so. I mean, the stewardship of AT&T in the last 20 years has been poor at best. Um, but I don't know. I'm a positive person. Nowhere to go but up, right? And you have so many assets, and you know the the cash flow. The cash flow is all there, you know. So yeah. These capital expenditures are coming down. You know, they'll have to. Look at this. That's just dividend money that they're paying out. It's a lot of money. This is in millions, by the way. 14,926 millions. I don't know. People call me crazy. They're like, I don't know. They got so much debt. So much debt. Yeah, they do. They got a ton of debt because they've been buying shit. So, yeah, they've been offering. Yeah. What I am worried about is their cable segment. Yeah, you can see everybody else is too. I mean, NBA. This is all the news on Seeking Alpha is about. MLB. Yeah. Well, I've been going for about an hour. Um, I really just wanted to test some stuff out, see how it's going this morning. Play it a little loose. Uh, you know, up 40, 45 bucks today so far. Um, we'll see where I'm at the end of the day. I might pop back on. We'll see. But I do plan to open every morning with about 30 minutes before open. I'll pop on. I'll try and schedule it. Um, but yeah, join me tomorrow, and I'll try and leave these streams up. I've heard different things about leaving them up. not leaving them up, but I'm gonna leave them up. We'll see how that goes. And yeah, we'll be back tomorrow. Uh, thanks for popping in if you did pop in, and thanks for